So I bought options on silver because I think it could spike up 50% from here. Now, this type of setup only happens once every 10 years or so. So I'm going to tell you why it's happening and how you can make money off of it too. Now, the backdrop is there is not enough silver to meet demand right now. Most people think of silver like gold, something that you buy because you're worried about inflation, but that's not the case at all for silver. It's an industrial metal. There's been one source of demand that has actually been completely changing this market, and it's solar. Now, silver is essential to make a solar panel. It's turned into a paste and then put into the panel itself. Because silver is the best conductor of electricity, and so there's no substitute for now. Now, guess what is the number one energy development today? It's solar. Now, why? Well, because it's cheap. It's actually the cheapest source of power right now. And the entire world needs power for things like AI. So solar installations have been growing at 20% a year. And all of that is fueling demand for silver. Now, but the problem is there is not enough supply of silver. And that's why the price is going up. Now, like I said, this type of setup only happens once every 10 years. Now, why? Well, because it takes 20 years to build a mine. That mine lasts maybe 50 to 70 years. Now, if you think about basic economics, supply and demand, what do you think happens if all of a sudden everybody needs more of that commodity, but it takes 20 years for a new mine to catch up? Well, what happens? You get price spikes. And that's why commodities markets move in cycles. So you as an investor in the commodity market, you wait for the opportunity when there's low supply and the conditions are right for the price to move up, and that's how you make money. So why now? Well, the silver market has actually been in a deficit since 2021, and that's when solar production really started to pick up. But the supply of silver, because it's fixed, has not kept up with that demand. And so you can see it. That's when the price has started to move up. Now, here is where it starts to become a projection. We know that China is the largest producer of solar panels, but the country in recent years has actually been in a recession, and it cut its production of solar in 2024. But what do you see in the silver price? It's still going up. So what does that tell us? That there's not enough supply of silver to keep up with all the demand, even when the largest producer of solar is cutting back. So that means the market is tight. So I think this deficit is going to stay. The data also supports that. And so I think the price will keep going up. So how do we play this? Well, if you want to make money as an investor, you need to know two things. One is when to buy, and two, at what price. Now, what typically happens in a commodity market is the market notices a shortage. Then people start buying, which accelerates the price move up. Now, if the price stays up there, it also functions as a signaling mechanism to signal to the industry to make more mines or to buyers to substitute that commodity. So that's why we monitor something called inventories. Now, that's the silver that's stored in warehouses. It's an indicator of supply. So if that goes down, what do you think everyone in the market is going to think? Well, there's not enough silver. And if you're a trader or a buyer, you're going to start buying more of it to make sure you lock in a lower price before it goes up. And so this is my view that there is a critical threshold where inventories get low enough to trigger that buying behavior. And I think that time is now. My estimates is there are about a year's worth of supply of silver inventory. And if it gets below that, that's when the price will start spiking up. And that's historically what happened with silver back in 2011 and back in 2020. So what price do we buy or sell this commodity, and where can it go? Well, that's where we can look at the options market to get a sense of what the market will do. Now, what I've done is look at open interest. That represents the potential buyers at a certain price. Now, when there's a lot of contracts open at a specific price, it actually tends to pull the price of the underlying security towards that area. That's because the option dealers that sold those contracts, when the underlying security price gets close to it, of those strikes, they're going to have to buy more of it to have it available for the option holder. In options terms, that's also called gamma. Now, the zone right now, to me, looks like it'll be between 35 and 40. Now, the price is starting to move up there. If it breaks 35, it may shoot up to 40 very fast. Now, longer term, we also need to estimate prices, not just based on the market, but based on real buyers. So that's where I also have an estimate. Based on the change in inventories, with the assumption that a shortage will trigger more buying and move the price up even faster, I think the price could shoot up to 47 or even higher if we get below this threshold of inventory. So once you get the prices in mind, you also want to maximize the returns that you can get and also limit your risk. So what I did is I bought a 30-35 bull call spread on SLV, which is a silver ETF. Now what that means is I've bought a 30 call and I sold a 35 call with the same June expiration in a 1-to-1 ratio. That cost me about $150 per spread, and the max payout is $350 per spread if it gets to 35. So that's a 2-to-1 risk-reward ratio, which is what I like. Now, I bought it in April. The price has moved up, so it's about 120% up so far. But I think we're only halfway through this short-term move, and I'm still holding and paying attention for a potential spike beyond that. So that's the thesis for silver and the trade. Follow along if you're interested. This is also what we teach at the Accelerator, and thanks for watching.